The first thing we must do is make sure that you have a clear understanding of the most important accounting words right from the beginning. The only reason why people think that the accounting words sound complicated is because the words are used in everyday life, but when we use these words, we're not using them the same way that we use them in accounting. We're using them as a metaphor for the way we would use it normally in accounting. For example, the word asset. We all know the metaphor. It means something good or helpful. For example, you might say, she's an asset to the team. However, the real meaning of the word asset is anything a business owns that has value. Now, most assets are tangible assets because you can physically touch them, like a car or a furniture item or a bank account. But there are other types of assets that a company could own, like copyrights and patents, and things that you can't physically touch, but things the company did pay for that they own that has value that will help the company earn money into the future. So you see, asset is an idea. It's something you can own that has value, whether you can touch the item or not. We even have the same issue with the word liability. The word liability is usually used as a metaphor. It usually means something that's a hindrance or something that would work against you. But the real meaning of the word liability is money or some kind of obligation the company must pay, give, or do in the future. So, if the company took a small business loan, that would be an example of a liability that you would have to record in the company books and records. If the company had a mortgage for a house that the company owned or a building that the company owned, that would also be a liability of the company. What if the company took a car loan? Well, we know the car would be the asset, but the loan would be the liability. And of course, if the company had a company credit card, or let's say the owner had a company credit card, the company credit card would be on the books and records as a liability, just like the bank account would be on the books and records as an asset. But remember, a liability can also be a future obligation to do something. For example, if a customer paid in advance before getting a product or a service, between the moment we got the money and the moment we give the product or service, our company books and records must reflect that we have this liability, a future obligation to pay, give, or do something. You probably already know that the three most important accounting words that we learn at the beginning are assets, liabilities, and owner's equity. But I think owner's equity deserves its own special video because all the other ideas of accounting come from the idea of owner's equity. So don't forget to tune in to the next video, What is Owner's Equity? A Conceptual Overview. I thank you for listening to my definition of these words. I know they're going to help you.